Well, it's February 6th, and sorry, I look a little bit like Ragnar Lothbrok over here, but it's getting cold, so you're gonna have to put up with it. This is the log that takes 30,000 to a million, and I'm going to take you through the account first, show you what's been happening, and maybe review a couple of my next moves, and then I want to talk about Goldman Sachs a little bit and why I've been playing around Goldman Sachs. I think it's a little bit undervalued. So I'm gonna briefly go over its statistics and perhaps share where my sell point is on that company. So without further ado, let's go into the browser. I'm sitting at 185 over the weekend here. It's a Sunday, so markets are open soon. And I had a pretty good week, I guess, relatively speaking. Goldman Sachs had option exercised and then another one. So I sold a put, bought the shares, and then sold a call, and then sold them. So I collected maybe like $800 off of that. But let me take you through all the positions, and I'll talk about that in a little bit. Okay, so on the right here, oops, wrong one. On the right, you can see all of my option positions first. This is going to be the strike price, the ticker first, strike price, whether it's a put or a call, expiration date, number of contracts, whether it's a sell or a buy. If you don't know what any of that means, it's fine. We'll just skip to the equities in a second. The numbers on the right just represents the daily change in the option contracts. So just scroll through it real quick, and then you can pause the video player at any moment to try to figure out the exact positions that I have on. Now here are the equity positions. The daily changes on the right. This little graph shows you how the day went. This is the ticker and the number of shares I have. Now I don't truly have all of them because I do have a little bit of margin on there, so I have borrowed some money to buy shares. Keep that in mind. Just you can just scroll through these and just look at the number of shares, the ticker. That'll tell you everything that you need to know about the position. It's pretty straightforward. It's not like the option contracts. I have one share of DD here just to see what happens whenever they get delisted. I'm guessing that it's going to go to over-the-counter trading or OTC, but we'll find out. Alright, this is the account tab. Now this tab looks a little bit different than last time. Last time I had a ton of margin here, but I've sold the Goldman Sachs positions, and now I'm only using $72,000 of margin instead of 105. Now, I want that to be less, but it's hard to see how I can reduce some of that without selling off positions. I really want to get rid of my EBIX position, so I'm going to be selling calls around the $35 area, and hopefully that I can profit from that. I do have calls sold against EBIX that expire, I think, on February 18th, so I can re-roll those soon, and hopefully the stock hits the $35 strike price and I get to sell. I might even sell earlier if before my expiration date if the target price reaches that level. But anyway, let me go through this tab right here. This is sorted by total returns. My longest dated positions are the most profitable ones, and then sorted by equity. Unfortunately, eBix, VipShop, and JD comprise a large part of my account right now, but only JD is in the green at the moment. eBix is lagging by almost $7,000 and VipShop by $3,000. Okay, well that's the account. So next, I'm going to talk about Goldman Sachs a little bit. So Goldman Sachs has been very oppressive to me lately. They had a really monstrous 2021, and now they're still profitable, but everybody and their mother expects them to have less earnings, which is entirely possible, and more overhead because of the extra bonuses they gave everybody and the salary increases and stuff like that. So people are kind of worried about that. However, I'm not as worried because I think they're going to have a really nice 2022 as well. Maybe not as nice as 2021, but especially the way the year is starting, there's been a ton of volatility in the market. And they have a big market making business, Goldman Sachs. Like, they're really into the financial markets. And so when markets are volatile, especially when they're at a high level, they make a lot of money. Like, that's their bread and butter. So this is a perfect market in January so far for for Gold. I almost said Golden State, for Goldman Sachs. I am in the Golden State, California, but not a huge Warriors fan, though. I like them, just not a fan. Um, anyway, Goldman Sachs. I think they're gonna have a great 2022. They thrive on volatility, and I feel like they sell a lot of contracts as well, which is part of the reason why I wanted to buy the company anyways. They're like what I do except much better, right? So why not own the competition? Yeah, I guess you can say that I just compared myself to Goldman Sachs. A very far-fetched comparison, but some of the operations I do, which is like selling contracts, is the same stuff they do, except they do it in many more levels, right? They sell, futures, swaps, and all kinds of crazy instruments. Okay, so just a quick look at their statistics here. You can see that the PE is 6.19 at the moment. It was under 6 just a bit ago. For PE 8.83, it sounds more reasonable. Now you can't see the income market cap on the left, but their market cap is 120 billion or thereabouts. Their sales are 64 billion, their income is 21 billion, and they have 648 billion cash. Now, how is that possible? Well, they have a lot of debt, right? They carry a ton of debt on their books, and they use that money to operate and make more money out of it, and they pay the interest. So that's kind of how it goes, and they collect the spread between those two figures. So some people argue the more debt they have, the higher their profits are going to be, and that's probably true. And lately, people are a bit worried that they've been trying to get a little bit safer. They've been reducing their debt levels, so people fear that their income is going to be less, which is a fair concern. However, like I mentioned, with these markets, I think Goldman Sachs is going to thrive. All right, price of sales 1.85. The gross margins is really cool. I mean, that's really hard. I mean, it's not abnormal for the kind of business that they're in, but it's still, it's nice to know that the margins aren't this big. Return on assets pretty poor. Return on equity is decent. Return on investment is like under 1%. But these figures, again, they're pretty common for that type of industry. They make a lot of that up on leverage, right? Okay. Plus the numbers, they gotta get massaged. Here's what the analysts say, though. It's 443. Now, that figure, can't always believe it because a lot of the analysts kind of follow the price rather than predict it. But there's some type of analysis, at least, that that people did in order to come to that figure. Like, they can't predict the future, and they adjust their predictions downwards when the facts change. But still, there's a decent sum of people that actually do this for a living, which have valued the company at 443 on average. So that's $100 almost more than the price is right now. So that gives you a little bit of margin of safety there. Now, let's go look at some contracts. All right, so I'm going to go under Goldman Sachs. I believe I only have 25 shares left. 25 shares. And let's take a look at the history real quick. So the history, you can see here that I closed this position actually. I sold a put, and then I bought it back at 64. Sold it for like 300 and something, or I forget. And then I sold another one, another put, and then it exercised. So I bought 100 shares at 350, and then I sold the call, and then I ended up selling those shares for $500 profit, plus the premium collected, which is like, let's say 300 here, that's 700 plus another 400. That's almost $1,100 worth of premium collected in like 3 weeks. So that's pretty good. Plus the 500 profit. So far, Goldman Sachs has made me $1,600, which I'm pretty happy with. It's helping to offset some of the losses and some of the down moves that the rest of the account has been having. Okay. The earnings coming on April 13th, so plenty of time. So I plan on selling some puts next. Let's go into the market and see. Oh, I like this that they increased the number of, look, 1, 2, 3, 4, 5, 6, 7, 8. They're displaying 8 quarters of earnings now, which is pretty cool. I didn't notice that. So we'll see how that plays out. All right, let's take a look at the options. My next move is going to be to sell a put. So first thing we're going to do is pick a date. So it's going to be this Friday. And I'm going to be looking around the $350 price, which is not very accommodating right now. I might sell one. It's only $135, and I don't feel like it's a good idea to put up that much money for just $135 a week. It's not going to be enough payout for us, so I think 360 strike price would be better. I do think that on Monday the price will come down, so these numbers will change, and the 350 strike price might beef up by $200-300, and so I'll probably sell a put at 350, depending on how Monday plays out. Let me take a look at the futures here. Futures basically is a market that trades the indexes or other stuff when the markets are closed. I just use Yahoo Finance. Let me see if I can show you here. I just use Yahoo Finance for it. You can see it right up at the top here. I don't know if you can see that or not, but maybe if I close it in. Anyway, it says NASDAQ futures, Dow futures, S&P futures. They just ticked over. I don't know how to make the camera focus on the phone. I used to be able to do it somehow. Anyway, it's my watch list underneath. So it looks like futures actually up, but I do anticipate China going down, mainly because of this number here. It's HK. That's Alibaba. Oops, sorry about that. 9988.HK. That's Alibaba, and it's down right now 5.07%. So I do anticipate that to drag all the markets down, including the U.S. markets, and my account will go down probably, $5,000-10,000, but I'll still have. Let's see how much I'll have. I will have, sorry about that, I have 62,000 buying power to play around with. So when you cut that in half, it's about 30,000. So I'll probably just be able to sell this one contract. And that will be my total income for the week, because I'm playing around with, let me see here. I used to have a PayPal. Oh, okay, I just have the leak now. So I sold a PayPal put and it expired. Alright, well anyway, back to Goldman Sachs. So I do think it's going to tank. Let me go to the options again. So sell put. What I like to do too is I like to go in the future weeks and just to try to figure out, like, if I go 2 weeks out, what kind of premium I'm likely to get for this option. So you can see the 360 is like 563 here, and then 55 is 430, 350. So sometimes what I'll do is I'll just skip a week if I really want that strike price. If the price doesn't come down to where I want it, I'll just skip a week and I go a week ahead when the premium is a little bit fatter if I can't justify that higher strike price. However, I'm not sure. I mean, we'll see what happens tomorrow. I may not do it at all. I may actually sell a put on PayPal. Let me see what PayPal is at right now. It's hard to figure out what the decision is before the numbers actually start moving. But what I can do is I can have some plans, right? So that's what I'm doing right now. This is my process. So I'm gonna go to February 11th. Let's go to the strike price. I don't know, I was so far up. So 126. I would probably like to play around the 120, $125 area. So if I sell a put at 125, that's 280. I do think it's also going to drop tomorrow, but we'll see. So that's $280, and if I match the collateral I would have to put up for Goldman Sachs, that would be the equivalent of $700+. So that's a much better play here. There's much more premium on the table. So the implied volatility on PayPal right now is big, and it's a little bit bigger than Goldman Sachs because this is much closer to the strike price. But if I wanted to go down 120, it's still decently sized. If I give myself more safety, multiply that by 3, that's, $372. It's a decent pay for a week for 3 of these contracts. I don't know. I mean, we'll just have to see how the prices play out. But you know that if Goldman Sachs or PayPal drops down in that area, I'll be selling puts. If not, I just might actually wait. I may not do it on that exact day. I may wait for Tuesday for a drop, or I may look to just reduce leverage. It's just hard to know. I have to see how the markets move. All right, that's it for now, I think. I'm gonna stop it right here. Hopefully I'll make another video through the week. If not, I'll see you all next Sunday. Peace.